Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. It's kind of funny because I was going to say we have interesting things happening in the stock market, but I should say not yet. I think interesting things are going to happen. And today we saw the release of these Federal Reserve minutes, and the headlines in the financial media are focusing on the word transitory. They're using that as a buzzword to kind of explain what's going on. When we talked last month, the Fed had raised interest rates, and the Fed Fund futures have changed their projections from where they were back in December. Back in December, if you can recall, the Fed Reserve was predicting 4 rate hikes this year, and now the Fed Fund futures, we've had 2, and they're saying we're not going to have one in September, and they put the odds of December, they lowered them to about 40%. So it seems very unlikely in any dip in the stock market, it's not going to happen. Now, what's going on as a backdrop of that is, of course, the Trump administration. We haven't seen the tax cuts or stimulus spending or any of these programs that were talked about months ago. They just haven't been able to materialize. It's a logjam with the health care bill holding everything up for the moment. And who knows if anything will happen. It could be delayed to next year. But we had expectations we'd be riding with an economic boom this year, and it's just not happening. And the long-term bond yields are down for the year while the Fed's been raising rates, which is saying that bond market traders don't see a boom coming, and they actually are priced in lower rate hikes by lowering the interest rates themselves on long-term debt. And this spells eventually, if these trends remain in the bond market and what is happening with the long-term bonds, that's going to signal a slowdown, and that's going to hurt the stock market. And that goes against the narrative of stock market bulls, and of course the bull market, the gains this year, and the continuation of last year. So the people in the financial media are grasping on the word transitory. That's a phrase in the Fed Fund minutes to suggest that the slowdown in retail sales, the falling gas prices, the moves in the long-term bonds are just temporary, and they will reverse course in the coming months, and we will see the boom that has been promised to us somehow. I don't know how it's going to happen without Trump help, but this is the buzz phrase, and it's to suggest that don't worry about anything in the stock market, hold tight, and just believe it's going to go up. Don't think about the valuations. And I disagree with all that, but these are opinions of CNBC, and my opinion. I'm going to give you the opinion of the Federal Reserve today, and then tell you in the audience what we need to all be on the watch for to really get a gauge of what's really going to happen besides just going on predictions and opinions. But today, these Fed Fund minutes came out for the last meeting, and at a moment in the meeting, it shows that the participants expressed concern over the stock market. And what they were concerned about were the high stock market valuations. Now, they didn't say this, but the cyclically adjusted PE ratio, which is the 10-year average of the CAPE ratio, or the PE ratio, just for inflation, it's bumping on 30. And the only time it's been above 30 was in the year 2000 and in 1929 for about 30 days. So here we are at one of the highest valuations ever. And at the same time, they also expressed concern of low volatility, and it says in the minutes that they worry that the low volatility has encouraged people to take substantial risks in the financial markets. And then they say that could lead to financial instability. Well, I'll read the quote here so you know exactly what they're saying. A few participants expressed concern that subdued market volatility coupled with a low equity premium could lead to a buildup of risk to financial stability. That's the end of this paragraph. Risk to financial stability, of course, would mean stock market declines or wild swings in the financial markets. And I think that's what we have to be on guard for right now. This year, the VIX has been trading super low for historical standard for a record amount of time. I've never seen it trade this low, and I've ever been trading, and no one else has either. And what that means is that we've only had 2 days this year in which the S&P 500 went down more than 1%, and there were 2 days in which it went up over 1%. And there's never been as few days like that in about 20 years in the financial markets. So it's an unprecedented situation in which day to day it seems as if nothing has been happening in the stock market. You know, if you go from the beginning of the year till recently, has been slowly levitating higher without any decline, and people kind of seem to think that they've forgotten the pain that they can experience when there is a stock market decline. At the same time, these are monthly reports, but the margin debt has reached a record level. In other words, people are using margin on their brokerage accounts to buy more stocks than they ever have before. They've levered up. Now, this is okay as long as current situation this year continues. And in fact, the people on margin, as long as the market goes up, they're going to make more money. But the danger is that these conditions change, and I think they will. The Fed Reserve isn't predicting that. They're just saying that's a potential danger. Now, the reason I think it's going to happen is because we've seen on June the 9th something very interesting begin to happen, or appears to be, and that is that these very popular fad technology stocks of Apple, Facebook, Amazon, Google, and Microsoft, these 5 stocks generated about 40% of the gains in the stock market for the S&P 500 because they just went up so much. In May, they had a blast off, and many of the leading stocks in the market, even outside of these, I'm thinking about 2 dozen stocks in the Nasdaq 100, they went up parabolic in May, and then they all kind of topped out on June the 9th, and they've been lagging the S&P and the Dow, and now the Nasdaq is lagging those 2 other averages too, because these stocks have such an impact on it. And the Nasdaq has gone below its 50-day moving average, which has been support. If you look at a chart since November, it's been below for 3 days. It's the first time it's been below for 3 days since the Trump election. But more importantly, it now has a support level at 6,100. I believe if we close below that 6,100 level, we're going to see a decline to the next support level, which is somewhere at the 200-day and 150-day moving average. And that happens, the era of no volatility and, you know, a magic escalator of gains that we've experienced for the first 5-6 months this year is over. We're going to have volatility. We're going to have big swings and start, and that could be a topping phase. It could be a correction. That's something we'll have to judge as it plays out. Or if it's a top, it could be the start of a bear market. But again, these are things we can judge, see what happens, if there is a decline, how does the market act afterwards and so forth. But I really think if people are margin, they got to get off of it and they should really seriously, if they're 100% invested in the stock market, make a cash reserve, buy stuff that, if there is this volatility, will benefit, and I'm thinking gold and mining stocks there, because if there is any volatility, then it's going to become obvious that the Fed is not going to raise rates in December, just as the Fed Fund Futures is suggesting that. And it's going to change the outlook on the U.S. dollar, on monetary policy, and it'll start with the NASDAQ closing below 6,100. So anyone listening, they don't have to think about, oh, these are predictions, and then someone's predicting a crash, or someone's predicting the market's going to go up 10%. Just look at these levels, 6,100 on the NASDAQ, and you can start making changes if that happens. And you want a level for gold where you can feel confident that the correction and the sideways consolidation that has been playing out for so long since last June and July is over, and the next move is going to be a sustainable rally up. You can look for the GDX gold stock ETF, basically $23.5, $24 level. That's the recent high of the past couple months. It's been hit several times. If that's broken out in the coming weeks, then the trend will be obviously up, and that's going to be the big winner for the months afterwards, or maybe even years. So those are the two levels everyone can look for, and just keep your eye out on them.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Brian Fowler, President of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, the Canadian dollar has done reasonably well over the last few months, hitting a 4-month high, and oil prices have not been all that great. Usually they're tied together. Is the Canadian dollar finally coming unglued from oil?
I think so. I really think it's starting a very nice bullish move. I mean, compared to the U.S. dollar, the Canadian dollar has been weak for several years now. I mean, it's quite amazing. Let me load up a chart here real quickly, but it got down to about 72 cents on the U.S. dollar in May, and last year it got all the way down to 68. But if you look at the Canadian dollar, I think it's kind of trading opposite to the U.S. dollar because after the Trump election, it took a final plunge from where it was trading in the 74 to 80 cents range there for quite some time, and it fell all the way down to 68 cents. And immediately after the Trump election, there was this perception that, as I spoke earlier, that the U.S. economy is really going to grow thanks to his programs, and interest rates would really go up at a rapid rate, or much more rapidly than they have. And these things are not happening. And so I think that's actually starting to become apparent over the past couple weeks, and that seems to coincide with when the Canadian dollar made a critical breakout. You can trend line the highs of it from last April, May, and it broke its trend line just last about 2 weeks ago when it broke through 76. And to me, this looks like a major breakout. The way to interpret it is that we've had a bear market in the Canadian dollar now for years that put in a final bear market bottom last year, and coinciding actually with when the gold stocks bottom, by the way, and oil made a bottom then too. But now we're definitely shifting up. But I think you're right. It's obvious this isn't happening because oil's going up, because oil's been going down. Oil stocks, in fact, are down today with the Canadian dollar up. But there's more to the Canadian economy than just oil. You've got mining, all kinds of industry, and so forth. So I think just compared to the U.S., that the things in Canada are brightening up, and I really do expect the Canadian dollar to enter a bull market here and do much better going in the years to come in regards to the U.S. dollar, which actually looks the opposite, like we're making a top. So it's a very interesting development, to say the least.
We'll have more with Mike Swanson right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Mike Swanson. Mike, maybe an indicator of what's happening in Canada is auto sales. They've hit a record high. Meanwhile, in the U.S., how are car sales doing?
Well, I didn't know they're doing so well in Canada, because I assumed it was the opposite, because they're doing bad in the United States. It's actually quite shocking. Several months ago, they had these used car auctions across the country at several places. I know people in the car business that go to Pennsylvania. There's a giant auction at Manheim, Pennsylvania, but what happens is you can track the auction prices for the average used car sale, and they plummeted a couple months ago. It was actually quite shocking, because you had to go back to September and October of 2008 when they completely crashed to find them dropping at a faster rate. So that was very disturbing. And I actually asked some people in the car business what was going on, and no one really had a good explanation for it. No consistent explanation, and then all of a sudden it came out that the CarMax sales were blowing up, meaning they were really bad, and so there's definitely been a slowdown in car sales this year, and no one really knows why. They just, if you try to figure it out or go to articles, you could do it that way too. You just find all these contradictory explanations, and I actually think this is a symptom of the whole U.S. economy, because retail sales are actually down year over year, and if you go to shopping malls, they're just shriveling up, most of them in the United States, and restaurant sales are down. But this is kind of being masked by the fact that internet sales are up and Amazon's doing so well. People have a tendency to focus on that and obsess about that, because the Amazon stock has been exciting up until recently, the past couple of days. But in reality, I just think the U.S. economy, we're kind of spent up on our credit cards and buying things, and kind of people are retrenching. And the funny thing is, there's a big theme this year about hard data and soft data. The hard data being retail sales and car sales and just economic data that you can measure, and consumer confidence, which is skyrocketed since the Trump election. But if you study consumer confidence and see what it's correlated with, it's actually mostly correlated with the stock market. When the stock market goes up, consumer confidence goes up, because middle and upper class people, they get more wealthy, they feel better. But whenever there's a stock market dip of any kind, the consumer confidence goes back down. So I think the low volatility and without any drops is kind of making people feel better, but it's not really translating in the real economy. And the hope of the stock market bulls, of course, in the idea of CNBC people and Steve Leisman that this is transitory, that the hard data is that they assume that the poor retail sales, the poor car sales will accelerate and get better. That this will all change, and the behavior of people will match the expectations. I guess the way that could happen is if somehow Trump was able to accomplish something and kind of bring a positive shock to the country. He's doing lots of things on Twitter and making statements and playing a great character, and a lot of people enjoy it. But he needs to, if he can do something real big that's real, that would influence the economy in a positive way and bring real benefits to people. I mean, he's brought benefits to people that voted for him in the sense that they have a psychic benefit of feeling that they are on the winning side, that they voted for someone or a party or whatever and they won. But we need to see the benefits materialize in an economic form to make the economic data that's, they're actually real behavior of people to match the benefits of the rising consumer confidence. But it seems like, I think we have a window of 30 days, maybe 60 days for that to happen. And if it doesn't, that'll be another reason that may be the explanation for if we do see more stock market volatility or correction, for why that would happen. But I really am surprised that the car sales in Canada are doing very well, and I've heard stories, of course, about the real estate boom going on over there, and it seems like it hasn't really ended yet. So I don't know what's going on north of the border to make that happen. You'd have to fill me in on that.
Well, maybe people are just excited because they got lots of fireworks for Canada's 150th birthday on July 1st.
Yeah, well, that could be what it is, definitely. Something of the good holiday spirit.
Well, nobody's expecting Trump to come back from the G20 with a bunch of new trade agreements, do they?
I don't, but he's got to do something, though, you said it, there's something concrete. Something's got to come, so I don't know what he can do, but he's got to do something.
Well, what about what he promised to do? Cut taxes and red tape.
Well, that's the problem with the tax situation. It's kind of dependent on the budget, and we don't even have a budget yet. And doing the budget and doing taxes is dependent on this health care bill. Can they cut the deficit to give room for more tax cuts and so forth? And everything is just undecided, and there doesn't seem to be any resolution to it. Now, I got to admit, when he won, I was optimistic that these things could be done. I saw the stock market go up. I saw the Dow go through 20,000. I bought stocks immediately after he won, starting on the day after. I was actually short the stock market overall going into election day, and I got out of those positions and bought. And the Dow went to 20,000, and I wanted to believe, in this stuff. But by March, I came to the conclusion that people like David Stockman were right about the likelihood of Trump being able to accomplish much. And it's not because of Trump himself, but just the financial situation the country is in, that it's very difficult for Congress to do anything, because we're just hamstrung economically with this deficit, and it's just a burden. Now, in a way, Trump could be the perfect president, because if the reality is that the politicians in Washington can't do anything, and he said that himself last year, well, maybe he is the perfect person to be in the White House, because he's sort of a big distraction. His tweets and statements and the controversies and his opponents in the media attacking him, it creates an appearance that there's all this thing going on, all this stuff happening, and really, I think it's masking that nothing is happening. But if nothing happens, if nothing changes, and the stock market has gone up this year on the expectation that things are going to get better, that we're going to get out of the economic malaise that we've been in since 2008 and that helped Trump get in office. But if he can't do anything, and that's not going to change, the stock market is on borrowed time.
Mike, thank you so much for chatting with us.
Thank you. It's great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for our guests or the show, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.